Good morning and welcome everyone to the Money Control live stream. You have tuned into markets with Santo and CJ. Well, I know all of you are buzzed about Elon Musk taking over Twitter, but it's time to concentrate on our market. And after 2 days of heavy losses, we are finally going to see a green tick, or so it seems, right, Santo?
And well, CJ, you are the one predicting it. I mean,
absolutely.
I must say that you were bang on target this time.
Thank you so much. No honor is mine. So as I mentioned yesterday, I told you that the futures, the deep discount in the Nifty futures to the the Nifty spot price was indicating that we had ventured into an extremely bearish territory. And although the fundamentals had not changed that much to that extent, we know the macro concerns that are there. We know that inflation is a risk. We know Fed raising interest rates is a risk. We know Russia-Ukraine war is a risk. So,
and we also know that probably that is the reason why the market won't go anywhere in a hurry.
Well, at this point of time, it seems like it's going to go higher. So that is what matters. So, that said, we are in for, it seems like a short covering rally, what I mentioned yesterday. And this short covering rally could sustain not only today, but even tomorrow as well. Because remember, on Thursday, there is an expiry of the monthly, futures derivative series, April derivative series that will happen. And generally, traders tend to square off, especially if they're taken bearish position, they tend to square off their positions because nobody wants to take a risk with delivering shares, right? On
but Thursday. This is again assuming they won't come back with renewed vengeance tomorrow and probably carry their short positions forward onto the next series. Really given that it's we are still slightly cautious on the market.
No. A day ahead of expiry, I doubt they will be wanting to initiate fresh bearish positions.
Let's see.
But I think there is a little bit more to this than meets the eye. That the gains that we might see over the coming days. Inflation concerns probably, it seems, are ebbing away. Why I say that? Because a lot of the commodity prices which were driving these concerns, your copper, your crude oil, you talk about zinc prices, a lot of these prices have now fallen below the levels they were when on the day that Russia had invaded Ukraine, that is February 24th. So let's remember, on February 24th, RBI had an accommodative stance, right? The change in stance, or an indication that it will change its stance going ahead, happened only because of the sort of spike that we saw in commodity prices globally, be it crude oil, be it food prices that we saw because of the Russia-Ukraine war. Now, given that a lot of these commodity prices have corrected, and yesterday we saw the sort of rally that we saw in the 10-year benchmark government bond yesterday. That indicates to me that maybe market is just repricing, that probably the first rate hike from RBI may not come as soon as June that people were fearing earlier. And it may get delayed or may stay in the August territory that was market's earlier assumption before Russia invaded Ukraine.
Well, counter argument, CJ, here, it's a fair point that, commodity prices have eased a bit over the last couple of days. But the commodity that matters most to a country like India is crude, and there is still no certainty, visibility in outlook there. The prices have fluctuated; they've fallen below $100 a barrel, then moved up again. And broadly, if you look at consensus estimates across the board, the average is expected to be higher than $100 per barrel, which is not a good thing for India. Yeah, so that is a commodity I would be worried about.
But let's remember, when a lot of these analysts and brokerage houses were, coming out with estimates that crude will remain $100 per barrel throughout this year, China was not as big a concern as it has become over the past 2-3 days. Now, with that economy, one of the biggest oil guzzlers out there, indicating a possible sharp slowdown because of COVID outbreak in Shanghai, in Beijing, and other parts of the country, the crude oil market is right now caught between the impetus that it gets from the continued sanctions on Russia. Second, the demand, downfall that comes from slowdown in China. So, in a way, the best case scenario for our market is that crude actually does not move anywhere and it stays in that $90 to $100 per barrel, territory, and probably gives policymakers a little bit of certainty when in such an uncertain environment.
That's just crude is one, two more factors there. One is the dollar index, which has remained above 100. That is also a cause of concern for emerging markets. And lastly, we are not done with interest rates in India yet. Former Governor, RBI Governor Raghuram Rajan today said that to control inflation at some point RBI will need to bite the bullet and take the hard step of raising rates, and certainly it won't be anti-national.
Nobody is denying that. Nobody is
well,
denying
that said, let's quickly move on to stocks to track
anyway,
today.
Bajaj Finance is on my radar today. The company is going to come out with its March quarter numbers. Numbers are expected to be quite good, and generally the thing with Bajaj Finance is that its earnings tend to set the direction for the stock. If it is bad, then you will see the stock underperforming. If it is great, then you'll see the stock outperforming. Now analysts are expecting around 70% growth in net profit in the March quarter, and about 14.5% jump in the net interest income for the company. More so, the loan growth is expected to be quite good. The update that came from Bajaj Finance was quite bullish on loan disbursement. So overall loan growth is expected to be around the 15 to 18% range. And this could, further, and let's remember, what investors will really be, watching out for is what the management has to say about the digital transformation that is going. Bajaj Finance is now trying to become a fintech company, along with the NBFC legacy business that it has. It's also trying to get into the fintech territory, and that has of course led to a sharp rally over the past year, and the sustenance of it will be how bullish the management comes out on the transformation.
Well, CJ, I was speaking to our colleague Neha Dave from Money Control Pro, on her views on the stock, and broadly, yes, this is what she had to say. If you look at the price to book value, PB, which is one of the benchmarks for NBFC companies, at 9 times, it's really high for a company like Bajaj Finance, right? Also, the longer term plan of Bajaj Finance is to become a bank. And if you look at the price to book value of most banks, even someone like HDFC Bank, it's in the range of between 2 to 3. So this kind of high valuations were fine as long as this Bajaj Finance was growing at about 25 to, the loan book was growing at 30+% annually. Now that has moderated, so has the growth in profit numbers. If you look, already the asset growth during the fourth quarter was tepid. It was not something spectacular. And look at the stock price again. It has still not crossed the highs of October despite repeated attempts. So that should tell you that the market has some bit of concerns there. Transport Corporation of India is the next stock we are keeping an eye out on. So 23% gain. Yes, 23% increase in earnings. 23% increase in the stock price over the last 3 months. It's been a steady performance. Overall, logistic companies have been in the limelight, and one of the advantages for Transport Corporation of India is that it's been getting its seaways business, which is where the margins are much better. That's done pretty well over the last couple of months.
Because of the entire rise in shipping price,
yes, possibly. And so this is one stock that I would be bullish on.
Yeah, maybe maybe the stock is doing quite well. Maybe it is one of the outperformers within the bracket that it works in. But the stock's valuation now leaves very little upside. I mean, the stock is up almost 70 to 80% if you look at it on a 1 year basis, and this entirety of gains have seen mutual funds actually trim their stake, which tells me that fund managers at this point of time are not seeing much valuation upside or re-rating potential for the stock from here on. Also, let's remember that TCI has industry leading valuation at this point of time. The price to book of TCI is the highest within that logistics space. But at the same time, it's been underperforming the industry both on operating profit as well as on profit growth. So that I would be a little, will take this rally in TCI with a pinch of salt instead of going whole hog on that one. That said, GMDC, I mean, this is a turnaround story of the last year. Has not made as much buzz as probably some of the other stocks and companies make, but after reporting a disastrous loss in FY21, the stock has seen, a company overall has seen a dramatic turnaround. For the Q4, they reported very strong earnings, double-digit growth in net profit as well as revenue, and there is a lot of optimism as well for GMDC. Why? This is the third straight quarterly profit that the company has given after seeing a string of losses during 2020 and 2021, and now the future of GMDC may lie in rare earth mining. Why rare earth is important? Because it's utilized in a lot of the the new age industries such as electric vehicles. You have semiconductor chips, and a lot of these spaces. And rare earth is, as name goes, rare, and therefore the margins are much more greater there. And if GMDC does strike luck in finding good rare earth mines in Gujarat, then the re-rating potential on the stock is pretty good.
Well, can't pick too many holes in that one, CJ. I mean, it's
Thank
been
you.
clearly a
You can't.
turnaround story, but at the same time, if you look at the profit, absolute profits of the company over the last almost a decade now, that has not changed in a big way, despite there being an improvement in top line. So, the re-rating largely would depend on to what extent the company is able to improve its profitability as well. Also, the power plant at Kutch, that's been something which has been bleeding GMDC for a long time now. I'd be waiting for some turnaround on that front
I
as
think
well.
the new management has indicated, I mean, in recent interviews to media publications, that is now going to be the focus of, besides the rare earth business, to turn around that power plant business that has what guzzled 1600 odd crores in past 15-16 years.
Yes.
So yeah, that I take your point. It is something to look out for. But next stock on my radar is BPCL. Well, story for BPCL for the past 3 years was all about divestment, right? Of course, there has been a little bit of disappointment there, but let's focus on the earnings side. For BPCL, CLSA is expecting a bumper quarter in March quarter. Why? Because gross refining margins benchmark, that is seen at the Singapore hub, that has rallied to what, record highs because of sort of supply constraints that we have seen following Russia's invasion of Ukraine. CLSA is expecting about basically around 8 to $11 per barrel jump in refining margins for BPCL, and the brokerage house has named BPCL and IOC along with BPCL as their preferred pick, even over an industry leader such as RIL. So that goes to say a lot for BPCL, even though yesterday we saw a deep crack on the stock because of the news flow coming out.
Exactly my point, CJ. See, the thing is that the divestment, much awaited divestment, is not happening. Clearly, bidders are uncomfortable.
Let's not lose hope.
Let me complete. Let me complete, CJ. It immediately shows that bidders are uncomfortable with certain aspects. The most notable one being that state-owned companies so far don't have the pricing power within there. So whenever prices move up, they are not allowed to pass it on as quickly. For all the talk about fuel price deregulation, it doesn't seem to be happening that way, when prices move up very sharply. And what happens if the prices of the fuel sold by state-owned companies don't go up? Obviously, the private fuel companies cannot raise their prices either.
Possibly,
we have already seen that. That's one. And secondly, there's also some bit of uncertainty over who will take on the subsidies of that of BPCL, which was one of the reasons the bidders kind of backed out. So these are two major negatives. Lastly, the marketing margins of petrol and diesel both are still negative at this point, which is one of the concerns for that. I think so near term, we could see the stock being under some kind of pressure for a variety of reasons.
I really doubt that, because I think the focus will shift towards earnings. But that said, last stock on my list is Tech Mahindra. Well, interestingly, LIC has been buying the dips on Tech Mahindra, and this is happening while there is carnage out there on IT stocks, and it basically reflects that they still have confidence in the IT story and Tech Mahindra in particular. And let's not forget that Tech Mahindra is going to be the chief beneficiary of the 5G cycle that is going to come not only in India but globally as well. So really a stock to watch out for.
Yes, market has just opened. Nifty has opened about 100 odd points higher. It is above the 17,000 mark. Nifty Bank is also quite strong. It's up 1%. Nifty is up 189 points. In fact, 17,144.
Census is about 600 points.
Yeah. So the start of the day pretty much on expected lines.
And who's leading it? Your favorite banks, huh, Santo?
Which is that?
Your Nifty Bank is up about 1.2%, and among the stocks, Axis Bank, we are seeing a good amount of traction in ICICI Bank as well. SBI, ICICI Bank, HDFC Bank is up 1%. Wow, I did not see that coming.
Well, yeah, you were talking about Tech Mahindra, but CJ, the counter argument against Tech Mahindra is that one, its margins are among the lowest compared to peers. That's that. So when attrition hits, obviously Tech Mahindra is, its margins shrink even further. There's a lot of hope right now placed on 5G. In a slowing economy, probably if the rollout doesn't happen as expected, this is clearly going to be a negative. And lastly, too many acquisitions over the last 1 year. The latest acquisition of Comtech has not been viewed very positively by the market. If you see since December, the stock has been underperforming, and it's almost now 30% off its high. Okay.
Yeah, but a lot of that has also been driven by, what is happening in the global bond market with yields rising and the repricing of valuation of IT stocks
Yeah,
by
but most
FPIs.
other
It's not
IT, this
fundamentally
one
driven.
is the furthest from its all-time high, and
It
it's
is, it is,
30%.
it is
Okay, so
probably
that is
along with
telling.
Wipro, it is probably the furthest from its all-time high. Also because in the the ladder of IT stocks, generally Tech Mahindra and Wipro tend to get beaten the most
Yeah.
compared to the big wigs such as Infosys and TCS. But see, the government has indicated that spectrum auctions are going to happen. They're going to take place this year. Plus, 5G is not something that people can delay, right? They used to talk about 4G, oh, it will not do anything, but look at what 4G has done. And 5G is going to be the catalyst on probably a larger scale, not only for industry, but also from a consumption point of view. So no telecom company will want to miss out on, and Tech Mahindra is providing a very critical part of that 5G infrastructure for telecom companies. So I really don't think this is a tailwind that is going to disappear very soon.
Okay.
Anyway, that said, आज कुछ अंदर की खबर है?
So, Birla Tyres has been seeing huge deals over the last few trading sessions. In fact, there was a bulk deal of 25 lakh shares on Monday, and there was another bulk deal of about 25 lakh shares on Friday as well. So, it's been sold by Houston Finance, which has been one of the long-term holders of the stock. Now, nothing great going for Birla Tyres at this point in time. The stock price has crashed from 24 rupees to 15 rupees over the last 1 week. The company owes money to just about everybody. It's defaulted on its bank loan. It's in fact it's a NCLT case right now.
Yeah.
But at the same time, the company has some plans to turn around, restructure its operations. How that will play out is anybody's guess. It's planning to demerge its passenger vehicle, passenger car tire business into a separate company and give stake to banks in that particular demerged arm, and also get in a strategic investor. So this is the talk out there. I mean, how it will play out.
If this is a turnaround story, then I'm pretty sure retail investors will be quite interested. You know how we love a turnaround in this market.
And a cheap stock also.
Yeah, I mean, yeah, it's affordable right now. So yeah, I mean, that is there. I mean, we all know, retail investors are the one who counted on Vodafone's turnaround when nobody else was counting. So yeah. Anyway, that said, let's just take a recheck of the market. Some very, very buzzing stocks right now. IndiaMart Intermesh is up about 5.5%. Internet platform stock doing quite well. Nippon is doing well. Nippon Asset Management, their earnings are going to come out later today. Up about 3% on the counter. Varun Beverages up about 3%.
There's a bonus issue also coming.
Yeah, Varun Beverages is going to come out with a bonus issue. Plus, it benefits from this, this hot summer that is leading to, jump in sales of Pepsi, Coca-Cola, whatnot, a lot of the soft drinks. Some very, I don't know, not so very great fundamentally strong names such as Dhani Services is up about 2.5%, one of the top 5 gainers in Nifty Midcap 100. So yeah, it seems like we've seen a little bit of a revival of risk appetite, but this is largely, I think, driven more by short covering and the positive cues that came out from the US market.
Well, that's all we have in this episode of Market with Santo and CJ. Thank you for watching, and please do share your feedback about this show.
Yeah, and definitely we'll catch you back at 3 p.m. with all the day's action. Do follow us on the social media links on the bottom of your screen and have a great trading session. Thank you.
Thank you.